Yo, what's up, everybody? Sorry we didn't hop on yesterday. I had a really long day the day before. I was working with one of my close friends, so I was a little too tired. So yeah, we're here today. So hopefully you guys have had a safe week today, or this week. There's been a lot of craziness, right? Like FOMC, NFP, like CPI is what is it coming? Is it today or no? It's tomorrow. Yeah, CPI tomorrow. So we'll see how things go, right? Morning, Fritz. But yeah, hopefully you guys have cut your risk. I have gotten a lot of messages over the last couple days of pushing too hard and then not so good things happening, right? So it's one of those parts of the year where you got to pull back your risk. You have to, especially if you don't necessarily have, all the things you need to have in place, which you should be using this month to try to accumulate those things. I want to show something that I showed my private group. If I could pull it up real quick. So I get asked the question all the time, like, what are the main components of what it is that we do here, and what has allowed me to be consistent? What's allowed the students that have come to me to basically not necessarily skip certain steps, but put certain building blocks in place. There's a good amount of stuff that needs to obviously be understood about a lot of these topics to be proficient. But at the same time, if you get your mind focused on these things, this is how I was able to make things speed up a little bit for myself. It took me, a good 2.5 years to really be in line with what I know I needed to focus on, and then what I had to obviously change and improve upon. But this here, this not exhaustive list of things is so important because all of this stuff helps you build trust. All right. And the more trust you can build over time, obviously, trust comes from building a relationship. Same with normal relationships. It's just the same when you're trying to develop a relationship with your model. And if you are not looking at it that way, you are doing things incorrectly. Because we look at traders on the internet and we think how are they so confident? How are they so, if they're not lying, obviously, most of them are liars, but how are these people being successful? How do they have so much trust in what it is that they do? Well, the key element is obviously experience most of the time, because in a relationship, you obviously, you got to spend time to build that relationship. But when it comes to concepts, I've gotten asked the question a lot, what concepts would I say are the best concepts, the most impactful, I should say, concepts on the things that I do on a daily basis. And it has to do with these right here, right? What is it? 1, 2, 3, 6, 7, 8, 9. Oh, ironically, it's 10, right? 10 different categories. First and foremost, starting with risk management. Okay. I could throw another one in there, mindset, but hopefully it's a given that mindset is vital. You got to have the right perspective. You can't be playing games, because this is not a game to be played with. You'll be played with and or pushed to ruin. So these types of weeks, it's very important to remember that But I just wanted to make sure that I pointed this out as we're going into the new year. Uh, this month, every single year in my private group, we're focused on organization, right, and kind of focus narrowing. Because if we start the year next year and we don't have any structure with what we're trying to do, if we don't have any goals, if we don't know, what's going to be potentially the most impactful, which is different for everybody, but these are like universal things in here. We all have to understand risk management, power three, daily, weekly ranges. Those things are, as an ICT trader, it's like a pillar. It's one of the first things you should be mastering, right? Daily, weekly profiles, that kind of goes hand in hand with the weekly range and power three. Liquidity mapping, it's something that I talk about all the time, pointing out the different liquidity pools that you need to focus on. Market maker models, it's structurally just unmatched, right? When it comes to knowing what price is actually doing and how to navigate it. So price navigation is heavy when it comes to, or heavily impacted when it comes to market maker model understanding. So you want to make sure that you are focused there too. All this stuff we talk about and use on a daily basis also. This is not stuff that's just used randomly. It's used every day. It's considered every single day. Okay. And then bias and narrative, right? We talk about that all the time. Every Sunday, obviously, I go through the weekly prep process. Every week, we're essentially going over the whole process, right? On calls like this, we talk about the daily process. I know that there was news, obviously, as well, but I'm just gonna wait a little bit. So that's why we're starting here. So, but yeah, the bias and narrative process. Hopefully, those of you that have been with me for the last year, especially those of you in my private group, I'm more so in tuned really with like what my private group understands because I have full control. On YouTube, it kind of varies. You know what I mean? Because people like to jump around. They have other people that they're listening to outside of ICT and me. That may not even be in the community of ICT, and it throws them off. So I don't have necessarily as much awareness unless you guys are like Fritz in the chat, letting me know all the time, kind of how you're doing, and what you're going through and whatnot. Um, but I mean, me pulling your attention to this type of stuff, or at least laying this out like this, I guess makes me think like I am basically moving towards accomplishing the goal of putting you guys on the right path. And of course you got to start with the 2022 stuff. You got to, at some point get through ICT's 2016 mentorship. That's like, no matter who you learn from, if you don't do that, you're literally it's the wrong decision. It's the wrong decision. ICT has 30 years of experience. He's created unlimited amounts of profitable traders, you know. So for us to go on the internet, even with someone like me, right? Like this doesn't sell courses, this doesn't sell stuff. Me saying this, but I like to be honest because nobody else is, right? Only like a handful of people are. But you have to still go through those things, and then you use a community like this, a mentor like me, to help be that conduit to cover up the blind spots, and keep you on the rails because there's so much content. And of course I have my own little ways of doing things within the things that I've learned from ICT. So it's never reshaping or revamping the wheel, right? Or recreating anything. It's just using a sequence that I've developed with the tools that he's given, which ICT promotes and affords us the ability to do, right? Because no group of ICT traders trade exactly the same. Even if I trade the YouTube model and you do too, the 2022 stuff, I may still catch a buy, you may still catch a sell because your bias may be different, right? You may have a different process with that, right? So this is why these concepts will never go out of style because everybody's different. You could still have the same concepts, but still have a different engagement. Your thought process is different. What you feel comfortable with is different. Maybe the execution model is different, right? Maybe it's not the 2022 stuff. right? So again, I do think it's very important to go through at least those things. If you don't want to go through anything else on his YouTube channel or anything else, right? You got to start there, and then over the years you want to re-watch these things because you're gonna miss stuff the first couple times. And the reason being is because your attention is on something specific when you go into each video. Maybe you just heard about order blocks. Maybe you just heard about fair value gaps. And that's the only thing you're going to focus on because that's got your attention right now when you're studying the videos. Same with my content, right? Same with anyone's content that you watch. Because of the experience level you have, because of what you're currently focused on, and what's, again, grabbing your attention, it's going to be distracting whether you want it to be or not. And over time you gain wisdom. Hopping on calls like this every week, you gain wisdom, and you get to kind of push past some of the things that you may stumble on in many ways, and it keeps your focus narrowed on the right things, because not everything needs to be focused on at this moment. There's some things that are more important than others when you're at different levels of development. And over the last 3.5 years, and me myself teaching over 200 people, and then seeing a pretty decent size amount of them become proficient. I can't guarantee profitability. I never would do that because it's illegal. But at the same time, the results speak for themselves. Not only with what I'm doing on the chart, which I make very obvious, but also with students outside of just me. You know. So these things, again, these are the important things that I feel going into next year. By the end of next year, you should have a good understanding of these things because this stuff, it's risk management, price navigation, bias and narrative, how to navigate the weekly range, daily range, monthly range. You could even do it with a quarterly range, like I have mentioned here, which I talk about a lot with my private group. I mention it here too. Liquidity, right? Market maker models, like it's bigger than a pattern. Market maker models, they could be used for so many things, right? And like I said, bias and narrative, fundamentals, which is how we're generally on the right side overall, long term, like month to month, quarter to quarter. And this year, honestly, year to year, because I picked the low of the year. If you go back to where that low was in April, I believe, I literally called the low of the year, right? From a yearly order block. That doesn't come from me being on the 5-minute chart only, right? And you got to reinforce it with fundamentals when you're on such a high time frame, which we did this year, right? Validation and validation, live trade management, right? Live order flow, like real-time order flow gauging, like the relationship between each candle, how it respects wicks, how it respects order blocks, fair value gaps, inversions. Like, what does all that stuff mean when price is trading towards a level? And how could you use that to help minimize the mental stress, right? All those different little pieces of price action, the different components and relationships each candle has to one another, right? That's a little bit more advanced, obviously, and that's something that is heavily talked about in my private group because we're, live every day taking trades. Um, and then lastly, projection. Projection can be fairly simple, but all these things I'll somewhat touch on over next year. Definitely let you guys have a lot of good pieces of information about these topics. Um, and of course, if you ever need one-on-one support, if you want to have that type of relationship to me and this community, that's always available to you guys. Um, but generally, that's going to open up every quarter. At the moment, it's not open yet. It's going to be open next quarter. Going to be working with 19 students till the second quarter. So at that point, depending on where all those traders are at, I'll make a determination if we open it up. But that's kind of just how it goes. You can always join the private group to hop on those live calls every day. But when it comes to the one-on-ones type of experience, I only have so much time in a day. I'm only me. So, and if I have like 5 3-hour Zoom calls every single day for, 6 or 7 days a week to try to fit everybody in, and give them the time that they deserve, you can imagine that I can't manage more unless I, hire more students that are successful in my private group, which may end up being the case, to help stretch me out a little bit, like stretch out my sound. Whoa, wait a minute. But to like extend my like ability to teach, unless I do something about that, I can't have more, and it sucks. I wish I could, but it's just kind of the way it is. And you can always hit me up and we can have a conversation. And if someone drops out, right, I'll always have that available. So if you do want one-on-one support, you could just keep reaching out to me and I'll let you know, because people do drop out. The trading's not for everyone. And I don't blow smoke up people's ass. If you're going to come here to learn, you're going to learn, and there's good, there's bad. And we have to highlight all of it in order to be an honest, effective mentor, me personally, right? And there's not enough of that in this industry. So what the hell is going on here? How the hell did I do that? Whoa, that is weird. Well, have you guys seen this before? Whoa. It's in the same tab, but it's split it side by side. I've never seen that before. I don't know how to get it off. What the heck is that? Dude. Wait, can I just exit one? Yeah, okay. What the hell? That was so weird. Yeah, that was so weird. What the heck? Sorry, I feel like I'm getting sick. Maybe you guys can hear it. So I may have to mute the mic a couple times to not blow your ears out. So my apologies. But yeah, so hopefully what I just mentioned, that like those topics, hopefully you guys have been focused on those or at least looking at them. Because I mean, it's those topics will literally skyrocket your development, and I'm sure that you ask anybody that's actually good at using ICT concepts, and you show them that list, they'll tell you, yeah, that's like some of the foundational key elements, and mastering that definitely puts you ahead of the 8 ball. That's for sure, ahead of the game. So yeah, again, we have news at 6. We're about to roll into that. We just had news here, FOMC news. So even though it's not red folders, even these yellow folders with FOMC, they're still going to have an impact. So we want to make sure that, again, it's December. We're in the new quarter. If you guys haven't pushed your contract months to March of next year, basically the first quarter of next year has now begun. Okay, so if you haven't done that and you trade futures, it's time to do so, because we're now in the first quarter of next year, right? And we know that by bar chart, right? Bar chart shows you the open interest, and when the open interest on the previous contract month is not larger than the open interest of the next contract month, you've now changed quarters, okay? And money has now switched over to the other asset. The other one's going to be less liquid. There's going to be issues. It's going to be ugly price delivery, and the numbers are going to be inaccurate if you're not switching over. So unless you have the continuous contract, which it takes away some gaps from what ICT has said. I've done some views on it, like I've looked at it and compared it. It's not really much of a difference, but it's best if you're taking trades in futures, you want to be trading the actual futures contract. You don't want to deal with any potential issues. Okay, so if you haven't done that, you should go do that. But yeah, so if we're looking at this, we're not going to look at the other assets too much at the moment, like the bonds and yields. We're going to maybe glance. Let's just glance real quick. So you ever sideways, not really doing much. Not much hasn't really changed. Nothing much has changed. Still looks like it's, just rejecting here, going lower. This down here is a wick on that weekly chart. That's why I have that outlined. So if it does break through this down candle, or these down candles, which is a 2-week order block, if it were to close below the 50% of that, our next targets would be all of these quadrant levels. So that's how we would map out that liquidity and potentially use those as targets. A way that you can consider projection, right, just so I could slap this on, say we were looking at this here and wanted to see how far it could potentially go. This, run-on stops here, the breaker that formed. If you take it from this high to that low, every time this low is taken and it looks like this and you're going lower, you take it from the high to the low, and then you can get some relatively accurate projection levels using standard deviation projection. Right, so you could see what that leads to, and if you're like, where could it go? Well, get a projection like this. If you're bearish, line the projection up with a PD array. In the most simplest way possible, that is how you use ICT projections. At least it's one of the variations. There's a few of them. But this is the easiest one, and it's very accurate, and then when price goes into, say, the 2.5 standard deviation level, that could generally lead to retracements. Is it going to be long-term, full reversal retracements? No, not always, unless there's a reason for that to do so. It most likely would just be a retracement speed bump, and then it'll look to target the overall objective, wherever it's headed. This is not only used on these higher time frames, but it's also used on those lower time frames as well when you see stuff like this. And if you, like, for example, if you could spot a smart money reversal in a market maker sell model, you would use the projection from the high and the low of that smart money reversal if it looks like this, which generally it does. And then you get that projection, and you could start to see what's going to be targeted beyond and before the market maker model completes, right? And they could be used inside the market maker model too. Just line it up with a PD array, like this was done here, right? Volume and bounce, new week opening gap. All right. So give me a 1 in the chat if that makes sense, because that is a very useful tool. Just a 1 in the chat. Good morning, George. I haven't dropped out. Yeah, we've been talking about that, brother. I understand you're a little bit busy. No worries. I'll be here when you're not busy. So whenever you want to schedule that the next 101 just let me know. Can get you back up to speed for with any of the calls that you may miss. Fred said, I believe it's new in Windows. That's a new feature in Windows. I'm not sure how I feel about that. I don't even know how I did it. Yeah, I don't even know how I even did that. Oh, there we go. Okay, I see. I mean, I guess I could see the usefulness of it, but I wasn't prepared for it, so it is what it is. So yeah, if we continue to see this drop, it's consolidated, so we need some displacement to really be sure we're below the daily fair value gap there. Okay. So if this continues and price stays below this white area there, that's an inverted fair value gap. So we do have equal highs up there. So if it gets above that, it'll target the equal highs. Because it's sideways, we're in a range-bound environment, we need to see displacement. Breaking down below this is great, right? And if we create this as an order block and then rapidly reprice below that, I'll be a little bit more sure that we'll target deeper things like this, and it'll continue to go lower. But we're at the moment where it could easily just take this low, invert this fair value gap, and then continue to go higher. The 10-year and 5-year are a little bit weaker or less interested in going lower than the 30-year. The 30-year is more weighty, right? It's more heavy overall. Like if it's doing something, eventually it's going to drag these two along, right? Just like how the S&P, if there's SMT on the between the indices, and the S&P is the one that makes like a failure swing and it goes lower, while the Nasdaq and the Dow make higher highs. So bearish S&P, because the S&P is the one with the Kraken correlation like that, it's going to have a very heavy influence eventually. Okay, so when you're using S&T, those are some things you want to consider when you see, which one of them has the Kraken correlation. And if it's the S&P, even if the S&P makes like a higher low, and the Nasdaq and the Dow make lower lows, and it's rapidly repricing bullish for a bullish S&T, because the S&P is the one that made the failure swing and is the strength holder, it's going to be a lot more heavy impact than if it was the Dow that made the failure swing, right? It's just kind of just the way it is with that relationship. So something to keep in mind about SMT. Yeah, just my opinion on this asset. We'll see if it could hold this, right? If not, it's going to break above this breaker candle, and then that'll be used as an inverted level, inversion breaker. All of ICT's PD arrays have an inversion variation. So if you see a YouTube model bearish, or like a breaker bearish, or a bearish order block, or a bearish fair value gap, and they get traded through, those levels should be looked at now as a inversion. Okay, so it's kind of just the way it is too. ICT's mentioned that. I'm not just like magically saying that. He said that a few times in the last couple years. I think one time in a video, but a few times in Twitter Spaces. So that's why it's important to listen to those, because it's more than just him ranting and boring conversation. It's a lot of reinforcement and hidden gems that he intentionally puts towards like the middle or the end of those long drawn out lessons. So, suck it up, Buttercup. Okay. Listen to the freaking videos, or listen to the spaces. And I obviously do my best to pull out whatever it is that he talks about to kind of maybe save you guys time, but I still think you guys should continue to use those in your studies. And if you're in my private group, that's a requirement. You have to be listening to one every week. No excuses, unless you have a valid excuse. But generally, excuses they only sound good to those who make them. So sometimes they're justifiable, obviously, but most of the time, very questionable, right? So yeah, if the bonds are going to go lower potentially, we should see this potentially go higher. We're in a range-bound environment, so it's really a 50-50 shot of what it's going to do. And because that's the case, because because the bonds and yields are a bit shaky, it's going to, kind of send a little bit more difficult price delivery to all the other assets. Is that like 100% that's going to do that? No. But most of the time when there's that Kraken correlation and the bonds and yields aren't doing anything, it's going to have a pretty heavy impact on the assets that they influence, right? Yields impact DXY, positively correlated, reverse correlated to all the other assets, and the bonds positively correlate with the other assets like indices, commodities, foreign currencies, and they're opposed, or the bonds are reverse correlated to generally the DXY. Okay, so you could see how that relationship can be used to confirm if you're bullish or bearish in the indices. You could use that relationship. That's why we spend time on it every week, and then I'm talking about it right now, right? Because it's that important. It's part of the validation, invalidation, and bias and narrative process. It's one component in the list of 15 things that we look at for long-term bias, right? So yeah, looking at the currencies, go to the weekly chart. We have trendline liquidity up here that I've been talking about. It's basically fulfilled this. I've been calling for this all week. On Sunday, I also talked about this potentially getting up here, and it looks like we have fulfilled the target. So we'll see how the reaction is from there. We got an inverted weekly fair value gap in here. So we're going to watch that range. Unless it breaks down below that, I'll continue to try to see if we can't get up into this wick here. And because we already took that high there, we still have this to target. So we'll see what happens in there. It has been pretty rapid the last 3 weeks. So maybe they're due for some type of, small retracement. Maybe they want to come back into this, which created a BPR because it's an inverted fair value gap. Sell side, run on stops, buy side, overlapped. We took out this candle. So we got a change in state of delivery. So we'll see how long that survives, right? Maybe short-lived. We'll see. If DXY keeps on this tear going lower, then we'll see those things continue to go higher. But yeah, so that's my opinion on the currencies. And if we go to the DXY, I call for this volume imbalance to be reached into potentially. I want to see a very strong reaction away from that if we're going to continue to be bearish. And again, that should have an impact bullish for the other assets, right? Again, we're almost to the open, so that's when we're going to really start looking for potential ideas. Right now, it's just framework, getting a lay of the land, feeling things out, seeing what the relationships are overall, which is where you want to start. You start from the news, then you look at the other assets as a whole, like all of them, bonds, yields, DXY, indices, foreign currencies, commodities even, like gold. And my call outs for gold, if you've been listening on Sunday calls, they pretty much have smacked higher time frame wise. But yeah, maybe I'll talk about that later. But yeah, so we'll see what DXY wants to do here with this daily volume imbalance. It has had a pretty sizable run. We did hit this weekly bullish order block. Like I always say, when price hits an opposing PD array to the trend you're in or to the characteristics that you see price doing, you can expect that it's probably going to act at least as a speed bump. It may not turn it around entirely, but counter trend ideas are framed off of a move running in one direction and then hitting a PD array, the opposing PD array. In this case, this isn't even an opposing PD array. This is a bullish. Well, I guess it is because it's dropping, right? So it's dropping and it hit a bullish PD array. But if it is going to be bullish, that should be in line with the overall delivery. It's at this moment, we're not bullish unless we were to get above this monthly fair value gap, right? So it doesn't mean it can't retrace and be bullish for a couple days inside of the bearish narrative. This is why narrative and daily bias are different, right? Because narrative is the larger grand scheme of things, at least the way I classify it, and bias is each daily candle, which is not always within the higher time frame narrative. Okay, so again, unless we get above this, because it's been so rapid to the downside, the yields aren't really being too helpful, like I said. But unless we get up above here, if we look at 3 PD arrays above price, which is how we validate, one of the ways that we validate whether a trend's going to continue, if we're going to use that logic with 3 PD arrays being required to be broken to invalidate the run lower, we'd be having our attention up here. But again, even if it was simply to get through this monthly inversion fair value gap here, or is that a monthly? Let's see. Yeah, this monthly fair value gap. If it was to break above that, that would put us in a little bit better place to seek buy side and then see this go higher. As long as it stays below that and stays below these levels and continues to respect the wicks like this, that's going to continue to favor price going to the downside. All right, so hopefully that's easy enough to understand. So we'll see what it wants to do here. Again, this is a rapid run, and we have fulfilled a PD array that in the large grand scheme of things may simply just be something that's going to be used to retrace. This is where bias becomes hard for people because they'll see that it's bearish and they'll try to go in and sell every single day. Not every day in a bearish trend is going to be bearish. Not every day in a bullish trend is going to be bullish. So you have to understand the components within the price delivery that, like price reaches to a PD array and then retraces, hits another PD array and then continues, and when it should be invalid for you to continue to push for that direction. And if you want to have more activity, you have to understand this, right? Because if you're only looking for one side of the market, there's nothing wrong with that. If you want to just be a trend trader, trade only with the trend. But, if you want to have a little bit more of the world opened up to you in terms of opportunity, counter trend trading, there's a method to the madness. Some traders only trade counter trend. Okay. And this is part of the way that they do it. I've shaped models for students that are good at only counter trend trading because they get scared, even with the things that I tell them and the stuff that they learn from ICT and everything in between. So there's ways to only be a counter trend trader too, right? But you just have to figure out if that's for you or not. And it may be for some of you. I have 3 students that are solely counter trend traders. I have one of my good friends that favors counter trend trading, who I'm trying to not be stuck in that realm of things. But again, you don't have to even go beyond that. You could just counter trend trade, and there's a method to it. And part of that has to do, like I said, with opposing PD arrays being met. When we're in a accelerated move like this, right? Going lower, it hits a bullish PD array, and so it gives a retracement. Same with this, right? Bearish, hit an opposing PD array, being the monthly fair value gap. What did it do? It's a bullish monthly fair value gap. What did it do? It hit the fair value gap. Was it a bullish? Let me see. So up, yeah, it's an up candle. It's a bullish fair value gap. So it came down, hit that, going against the down movement there, and then what did it do? It gave a retracement and then dropped. What did it retrace to? A PD array, the wick, the breaker here that was created, right? The down candle. Use that PD array to do what? Target the next PD array, which was the low here, but then also a monthly or a weekly bullish order block. So you can see how price goes from PD arrays to PD arrays, liquidity to liquidity, like internal to external range. Sometimes it goes from external range to internal range, and then changes the whole scenario. But we went from this high to this low, or you can also say this high to the monthly fair value gap, right? The weekly high, quarterly high, right? Quarterly fair value gap, which is what's up there, to the monthly fair value gap, right? So it goes from, when you frame a setup off of a PD array, you should be targeting the next PD array, right? Whether it's a high or a low, or some scenario like this, right? Yeah, I'm definitely getting sick. Ugh, what a mess. I hate being sick. I was about to end the year not being sick, but now I'm freaking sick. What a shame. But yeah, so throw one in the chat if that makes sense. It's one of those foundational things that most people are not very proficient in or haven't studied, but it's really helpful. Okay, Fritz said, well, okay. Does that fit with internal range? Yeah. The internal range to external range to internal range function of price, it absolutely fits within that. Right, just a little bit more of a detailed, like where price should go or where it's going type of thing. Other than the blanket statement of like internal to external range expansions. Take low, then go. Yeah. So yeah, you got it, Fritz. So yeah, hopefully that makes sense with all of you. Appreciate you, Fritz, for letting me for verifying that it makes sense. So yeah, hopefully you guys understand what we're talking about here, and what I'm looking for, what I'd like to see in price. And that's not going to change unless something changes. Okay, it's going to have to really do some aggressive moves. What the hell's going on? Why is it not showing? That's strange. Oh, it's just lagging. Okay. All right. So we got the currencies, bonds, and yields. Again, we're keeping our eyes on this too. We got to see how this is going to behave. Go to the 2-week. We got the fair value gap there. Let's see. Let's go to the 3-week if we can encapsulate. Yeah, we got a bullish order block here on the 3-week chart. Could just classify that as a weekly bullish order block for the currencies. Okay, and we'll leave it there. And then we'll just see how it reacts from there. So we're inside that PD array. So we'll see what it wants to do. We took out this low. We'll see the relationship to that low. Is it going to act as a sweep inside of this larger PD array to then try to target the next PD array, which is the high up here? And then we also have the trend line liquidity if it does get real excited. We got a gap in here too. So prices retrading to that, rebalancing that. We may see the euro present this as a market maker buy model. So if that does be the case and it stays above this, this weekly fair value gap above the 50%, we don't want to see it go any deeper than that. If it does though, again, we'd have to adjust. But for now, we're going to stick to the opinion that, this may just be a retracement to try to go higher, and then act according to that, right? So, let me see. So if we're looking at this, see. So yeah, we got this as a weekly bullish order block on the indices. So let me actually. So yeah, price is working within that weekly order block. We're going to have to see the 50% of this get really taken out, close below, in order for us to really give up on the fact that this is still potentially wanting to go higher. Wait, let me see, why isn't DXY there? So especially if DXY is going to keep going lower like this may be pretty useful. Remember, we inverted this weekly bearish breaker that we were looking at, and then once it did that, we continued to push price higher. So we got to see what the reaction is at this order block. The bodies tell the story, the wicks do the damage. So if we just simply wick into this, and then we start to turn around here in the indices, in the Nasdaq specifically, then we should be able to continue with price going higher. It has been a very aggressive drop, so we don't want to pick a low, but we don't want to commit too early to the fact that price is going to drop since we're in that, or go lower long term, since we're inside this weekly bullish order block. We have an order block here too. We have a breakdown below this one too. So again, we're at a level where we're going to have to really see how price is going to behave in here. And if you drag this up, we're close to equilibrium in that range. We are still inside this range too, and if we move it up to there, we're literally at equilibrium, right? There hasn't been any buy side or sell side taken out relative to this time frame where we could then shift our dealing range focus overall on this weekly chart, because a new dealing range is created when buy side's taken, sell side's taken, and then we leave the range, right? Or, not necessarily leave the range, but, because if we leave the range, it'll start potentially setting up another dealing range as we follow price. If it was going higher, for example, as it breaks highs, and comes lower, it's creating new dealing ranges going higher, right? But if we stay inside of this dealing range, we have to still consider this equilibrium here. And those of you that have been with me for a while know that equilibrium presents us with consolidation many times. So we'll see if, let me see. We'll see if that's going to be the case, continued, or if that's going to continue to be the case. But you can see the indecision candle here at a weekly bullish order block inside of a larger time frame equilibrium. On top of the fact that it's NFP week, on top of the fact that it's December, on top of the fact that it's the first week of the new quarter. So that just tells you that you got to cut your risk. Don't be fearful, but cut your risk, because it can do anything. power 3 takes place in a quarterly perspective as well. So even if long term is going to be bullish, we may still see a manipulated move going against that because power 3 is power 3. It is what it is. It's on every time frame, you know? So we're definitely going to watch this because it hasn't necessarily like fully disrupted the trend going higher, simply because it did not respect this weekly bearish breaker, low, high, lower, low, right? So it turned that off. So it wasn't ready yet. So we'll see if this eventually becomes ready. We do have SMT up here at the highs with the other indices. So that may be an early sign, but just because you got an SMT and an early sign doesn't mean you fully commit, right? You got to wait, right? We got to get a couple of changes in state, at least 2 from this time frame. And then we also have to have 3 PD arrays get violated, right? In this case, where's our 3 PD arrays? Well, we have a order block here and the swing low, and we have this inversion for value gap in there. And before this low, we also have the 50% of this order block. Closing below that 50% of that order block, that's a strong indication that price is not going to hold. Because if this was the 5-minute and the midpoint of this order block gets violated, what would you be thinking on the 5-minute? We'd be thinking that that's probably not going to hold. So if we're looking at the weekly or daily or monthly or quarterly chart, we got to think in the same terms. It takes longer for things to unfold, but the principles do not change, which is something that many people don't understand, right? Some people never understand that. You know, just look at this as if it was the 5-minute chart. It's not the 5-minute chart, but the same things are occurring. So if we saw this price delivery trading into this order block on a 5-minute chart and it breaks through the 50%, that's when we can be pretty assured the price is not going to continue with the bullish run. It'll probably look to take it out and then continue to drop to this. Because this is a weekly chart, you can imagine that'll give you maybe a couple weeks, like 2 weeks, or maybe just the next week of bias, right? Or, you know, the overall narrative, where price is headed overall. And then you can use that information on the 5-minute chart, on the 1-hour chart, right? So hopefully you guys understand that. If you haven't studied that or studied the price in this way, I really encourage you to do that. Think about this being the 5-minute chart, how you would feel with the current price delivery, and where would it be headed, right? And just one of those things that's very helpful perspective-wise. Okay. Morning, Joan. Appreciate you hopping on. Hopefully you've had a pretty decent week. The trades you sent me yesterday were freaking fire, bro. It's freaking fire. I just got your message too, Joan. I'll look over that today. Appreciate you doing that. Giving me that PDF. Again, just a reminder for those of you in my private group, if you haven't sent me a PDF about your trading plan, if you haven't done the ChatGPT exercise that I gave you guys, the psychological exercise where you use ChatGPT as like a, you know, like a psychologist, which it is the case. Like, these things are really, really good at doing this. If you haven't done that with the prompt that I gave you guys that I've been asking for, I want you guys to go do that. Because again, everyone that's done it has had very good, positive response. So please go do that so I can review it. It'll help me understand where your weaknesses are, because maybe you haven't voiced them for whatever reason. The prompt I gave you guys will absolutely get you to do it. And you don't have to share personal things. If it's got like personal life and maybe the past things that you may not want to talk about. But I would definitely like to know the main points so I can cater to you, because that's the point of the private group, especially the students that are one-on-one. It's a custom experience. No one size fits all. No one model fits all. So these types of things just help me be a better mentor, right? So yeah, just wanted to say that reminder. So yeah, when it comes to the Nasdaq, again, I'm looking at this order block. We'll see if that's going to give a pretty decent response back to the buy side. And if we go to the daily chart with that in mind, where is the... Yeah, they've definitely changed. So they took, oh, they put it over here. They put the code editor. I was like, wonder what the hell, why does this look different? But yeah, they switched the template down there. So I guess they took it off. Whatever. So if we go to the daily chart real quick for the indices, for the Nasdaq, we do have a wick up here. This here, I believe. What the hell was that? Oh, I think it was the wick there. Yeah, it was the wick. I just outlined it wrong. So I wouldn't be surprised if it attempts to get up here. Depending on how price behaves in this price action here, on this time frame, it's going to determine with these up candles if we're going to get a second change in state of delivery. And if we get that second change in state of delivery below this open price here, because this is an up candle, that'll be a change in state of delivery if we break down through that and close below it. We'll have one change in state and a second change in state. And then if we can see DXY rally and the bonds decline, that'll be very favorable for us to then look to see a deeper run into this order block, which again, if I go back to that weekly chart, the line in the sand here for this order block is here. Right, so yeah, keeping that in mind, you know, we have seen that overnight, or just throughout the last like day or so, prices basically came back into the range right here. We opened up, got above the open price, and then prices basically came down, declined. So we do have a fair value gap in here I want to outline. And this is the 8-hour chart. So we got an order block here. We got another one that's inside that order block. This is what ICT calls a propulsion block. If it does want to go higher, right, and if things align with it going higher, we should not, in this case, because this is a propulsion block, which is a order block inside of an order block, we should not really see price break through the 50% of this and close. It may wick, but we don't want to see that close below that if it is going to be bullish. So these are some early signs that price may build a narrative to start going higher. We do have the wick up here. All right, so this is something to keep in mind. We're approaching the open. We have 4 minutes. And again, this here is the wick of the daily bullish order block from the high to the low. 50% of that is right there. That's going to be the important portion of it. So let me actually remove that. And then, like I said, we have this this wick up here. We can actually use the full wick. We can also add that line in there. So again, each of these areas, each of the quadrants of this upper wick, they're going to be significant. And if we can't even get up to the 50% of that, and we displace and, like I said, get down below this, that will confirm that order flow is now for surely 100% bearish, unless manual intervention comes in and they do what the hell they want with CPI or something. We are ahead of CPI. So the day before CPI, because it's one-sided and so aggressive, sometimes can lead to a problem. It can lead to stuff like this, sideways delivery. So again, we've dropped our risk. In November, we dropped our risk, and we've had it continued to be dropped since then, because this is the time of year where cracks and correlations happen. Smart money generally goes to the sidelines at some point, and the manipulation is very high. Okay, so we'll see how this behaves. We got that 25%, like I said, of the daily wick. So if we stay below that and it looks to decline aggressively and we end up getting down below here, we will end up being able to target the low here, maybe the 75% of this down wick in there. This is a previous day's low. Okay, so previous day's low, we got previous day's high up here. We got relatively equal highs, so that's pretty interesting. Before we even get down to these lower time frames, you could see that we could frame things out. And then when we get down to those lower time frames, it makes it a little bit easier. So going from there, we move down to this 1 hour chart. And again, we have our daily 50% level up there of that wick. And then we also have this one too. So we're kind of trapped in between those two. And so we will continue to watch the response that happens. Then we got this inversion fair value gap, like I showed you on what time frame was that? Was it the 8 hour? Yeah, it's the 8 hour. So 8 hour time frame there, and then we got this propulsion block here too. So let's mark off the 50% of that. Right, so as long as it stays above this, it'll continue to rise. If it breaks down below that aggressively, again, we have the large wick that I showed you. It's on the 8 hour. Yeah, it's on the daily chart. So there's another daily wick there too. So breaking down below this, our targets then become part of the quadrants. Simply, okay? There was actually an orange folder, Mike. Good morning, by the way, Mike, one of my private group students. Mike made his first withdrawal. Was it this week? $2,500? Not bad, bro. Not bad. Not freaking bad, bro. But yeah, it was basically an orange folder that did the decline in there, right there. So yeah, the yellow folder obviously did some damage, but you know, we'll see what the open brings in here. So we just hit the open. So let's get a little bit lower. Where's the 1 hour chart that I had? Okay. So you guys see a lot of lines, but I can actually just take this off because we've got the main area there. And again, all this down movement here, it's also a daily wick. So if we break down below this, that will be something that causes us to try to frame maybe this trend line liquidity getting targeted. Let's see, where's London? London's low is right there. And then we got this inversion fair value gap in here too. So we'll see if it wants to hold that. Right now, it's pushing against that at the moment. So I don't really see much else on this aside from the up movement there We'll see if it can get up into that. If it can't get up beyond, this fair value gap, this low to that high may end up acting as basically a balanced price range because we've got sell side, buy side, and sell side again aggressively. So if it's going to hold, we shouldn't break past the 50% from this high to that low, which we're getting real close to. And then, of course, we have this line in the sand too on the larger perspective to continue to verify. But yeah, so with that being said, let's actually start getting down to more of the execution timeframes. Start looking for potential ideas if they show up, right? We're real close to the open, right? We did take out the high here. The open came out, and we also have a regular trading hours gap in here. Right, that is here. So from up here down to the low of that, which again, you can see that with this indicator. Oops. So if we tap into that, right, and sweep this and then get inversion fair value gaps to start presenting swing highs, start to get taken out after we maybe run this low, that would be something I would be pretty confident in to try to see if we can get up above these highs again. Let's go double check SMT. We got relatively equal highs there for the S&P. That's interesting. Ooh, we got the Dow exploding. Okay. So the Dow too, you can see the retracement to go higher. We actually framed this one out too when we were talking about it. We wanted to see how that was going to behave. And if it inverted this, gave us that double change in state, we would then be able to adjust and then target something like this. But this high to that low technically is a bullish breaker. We're not even breaking outside of the up candle in there that creates that bullish breaker. So, it's again, we're not at the point where it's overwhelmingly bearish yet. So that is the problem trying to take shorts right now, is we're not fully committed yet on that higher time frame to target sell side liquidity. And it may start to do so, and I'm okay with waiting for the deeper confirmation rather than trying to think, oh, I'm missing something, right? But yeah, so this here obviously was a retracement, hit a new week opening gap. We pretty solidly respected that, so that's a pretty good sign to see if it's going to hold. I want to see how we're going to treat these lows down here. But because we have the higher time frame view from that initial analysis, if it was to break down below the low here and then use that as resistance, we could then start to look for whatever model it is that we utilize in the form of continuation and try to see if we can't get a little bit deeper to the trendline liquidity I highlighted earlier. If it does look to close below this, I'm demanding that. I'm not worried about missing a move. I don't care that this move played out. There is an argument in here. If you don't have rules stating that you can't take a trade around the 6:30 open, which I encourage you guys not to do, right? So have that rule to not take a trade at around 6:30. Wait for at least 20 minutes after, because you don't know what's going to happen. Manual intervention, the highest volume of trade and manipulation happens at 6:30. Sometimes moves do happen, right? Like this is a potential argument right here, right? New week opening gap, shift in market structure, fair value gap. Now that we broke below this low, if it's going to continue to break down, the regular trading hours gap only has sell side at this point. So it may look to retrace a little bit. See how we got down below this? So now, in my opinion, at the moment, we see that this move took place. It's outside of my rules because it's too close to the 6:30 open. So we got that displacement. So we'll see if that's going to continue. We also see this here, right? It's, like I said, it's showing us now that it's not able to get to the 50% of that wick. That is a strong bearish indication. And if we can see, let's see, is DXY moving higher? No, DXY is still kind of slow. We see that the currencies are not necessarily in a hurry. They did decline pretty solidly there. We don't really have any SMT, do we? Yeah, we have a little one in here up at the highs. But yeah, see how we have this shift here, right? This change in state. and now we're coming back, creating another order block. If it takes this out, I'd be heavily confident that we're going to dig a little bit deeper to sell side. And then if we see the indices do the same thing and continue with the decline, maybe respecting this, I'd like to see a retracement, see if it can hold in here, and then give us one more little attempt. And again, that would potentially, if a model presents itself in here to go short while we're below this and it refuses to break through that, and say we get a displacement, fair value gap, maybe a breaker that forms, I would not be too hesitant to try to engage that to then target something like this, especially if this continues to be broken. So again, I'm going to be waiting a little bit. I want to see how this unfolds. We're not missing things because price does a displacement. It's not the last displacement, and it probably won't be the last one today either, you know? So you don't ever want to think that it is, because it's irrational, okay? If you think from the perspective like, okay, my model's going to show up, and even though the first situation may have took off, our models present themselves over and over and over and over, especially if you're on these lower time frames. Okay. All you need to do is reset the rules. Like if you're specifically thinking of the YouTube model, the 2022 model, you just have to see a high created and then a run above that high and a swing low get shifted below, and then a fair value gap getting created inside the price leg. Like a good example of that is here. We had this run above the high, right? We had this retracement into here after a shift in market structure, and we have a higher time frame level that also helped continue to push it. Well, this is an entry there, but say you didn't execute that, you wanted to allow that to keep moving. Well, you could look at this high here. It took the high, swept the high. If you expected bearishness, right? High was taken, fair value gap was created, shifted market structure, return to the fair value gap, stop above the high. That's 2022 model in a continuation fashion. So that's what we want to look for again. We want to see that happen again if that's going to be the case. All right, we're now again breaking through the propulsion block. It's going to have to really give us some more displacement at this point higher for us to get in line with potential buys. At the moment, it's all short, right? It's all going lower. Because we broke outside of this, it makes it a heavier confirmation. And as long as we stay below this 8-hour inversion fair value gap, that'll continue to be the case. So that's what we're thinking right now. We are reaching for the open in here. We could see that we've spent a lot of time going higher in London. So fast London generally leads to this type of behavior taking place. Price going against whatever it was doing in London. If London was slow, that'd be a different story, because if we're bullish and London was slow, it may have a very, small, shallow run below sell side to go higher, preferably below the open price. But it looks like the high of the day, at least up to this point, has been set in London. And again, we just took out this 8-hour inversion fair value gap. So that's going to make it so we require pretty decent retracement through preferably this regular trading hours gap to really think I'm going to get in line with buys again. At the moment on the higher time frame too, we've had a huge decline. We've had a retracement. It's refusing to break through the 50% of the wick here, just like it refused to hit the 50% of this wick. We shifted market structure. Multiple PD arrays on the daily chart have been violated. Swing low, order block for value gap, which we also have that one there. I'm going to highlight that. Wait, is that the fair value gap? No, this is a different one than the 8-hour. So yeah, that's also respecting that. So yeah, I'm bearish at this point, right? Because we got below that, because it blew through the regular trading hours gap, we have literally zero reason to be bullish at the moment. We got these relatively equal lows here. If it does look to take these out, which it looks like it will, it'll probably blow those out in low resistance fashion. One concern is the wick down here. Each of the quadrants may act as a retracement level, because again, that's an opposing PD array to the move lower. Why is it? Why is it not populating? Oh, there it is. So yeah, we got to keep these levels in mind. But again, for now, we're just going to continue to see how this is going to react to the sell side delivery. It's a falling knife right now, right? You can see there's order blocks here. Watch how the wicks are respected. Right? Watch how the order blocks are respected. Watch how fair value gaps continue to hold. Watch how levels that should hold as bullish levels to the left of us get slid through like this 8-hour fair value gap. Which again, that is, wait, is it the 8-hour? Wait a minute, what the hell? I guess this was the same one. Just didn't include the volume or the not the volume imbalance, but the oh yeah, this little volume imbalance. I guess it didn't include it. I think that 8-hour that I just had on the chart was this right here. That just like threw me off a little bit. Whoops. Oh, it's this one. My bad. I was trying to figure out like where the hell. Wait, no, that's just like totally not correct right there. What the hell? Yeah, we got this fair value gap in here too. It's a inversion, or it's going to be a reclaimed fair value gap. So we'll see how it wants to treat that. Again, for now, aside from me just like throwing myself off a little bit, nothing has changed. It's still going lower. Okay, so that's where my focus is, unless it was to start to really ramp up and get beyond this high to that low, the 50% of that, or preferably getting outside of the regular trading hours gap. Otherwise, if that doesn't happen, we're going to continue to see price pushing to the downside until proven otherwise. You know, again, we can't forget that we're still inside this higher time frame bullish order block. You can see that it's having a very hard time really committing on the higher time frame to a response, right? It's trying to decide whether it wants to dig through this and keep going lower. The Kraken correlation overall, you know, between the bonds and yields, DXY, and the indices, it's obviously not necessarily helpful. So again, it's just one of those conditions, and you know, you don't want to overtrade in these types of scenarios, and you don't want to push too hard for needless reasons. There's nothing to engage at the moment unless you took the move up here that I just talked about from that 5-minute, right? Fair value gap, run on stops, shift, new week opening gap, but it's outside of my rules, right? So we're approaching the macro now. It has obviously ran before it even hit the macro, which, you know, it's not generally something we like to really see. But the macro, right, may present us with a retracement and another opportunity to get in line with price continuing to go lower here. So yeah, this here, like I mentioned, I pointed this out. It'll blow it out in low resistance fashion if it wants to take that out. So that failure swing there ran out very nicely. And so now the next level of liquidity would be down there. All of that's encapsulated by this trendline liquidity that clearly was used to engineer. I mean, look at the nasty price delivery the last couple of days. Ugh, that was brutal. We traded that yesterday in my private group and did pretty well. Those of you in my private group, tell me I'm lying. Tell me I'm lying. It was mainly students that took the trades too. I was very reserved yesterday, but we had a couple of students knock out some banger moves. But yeah, I'm just as reserved as I was yesterday today. because we have CPI tomorrow. I'm not willing to chase anything. I want price to fully commit. And it looks like what we were talking about with this potentially looking to fully commit to the downside, it's definitely on its way to doing so, at least for now. So we have this big drop. That's a change in state of delivery. We have another order block broke down below it. It's respecting the inversion here. 50% can't even be traded to, or it did get traded to, but it was respected. The wick here is being respected. So like I said, there's no reason to push buys. It's all short positions at the moment. And in order for that to change, it's going to require a lot. See the propulsion block here? That got violated. Okay, so it's just yet another reason why price is just continuing to hammer sell side. We still got the middle of this down candle. So this down candle, so we could continue to monitor that. I'm not thinking buys at all whatsoever at the moment. Until it proves that it wants to do so, we're all short positions at the moment. We definitely wanted to wait before the open to see how these levels were going to be respected or not, see how it was going to treat the run below this low. But again, once we got down below these levels in here, and now we've gotten below the regular trading hours gap, again, it has been nothing but bearishness, and we determined that that was going to be the focus while it broke through these levels because it was so close to the open. Because this is happening, like basically without a macro, there isn't really much news other than the thing that happened at 6 o'clock. So maybe this was this is probably a delayed response because the FOMC conversation is about the bank, right? A federal situation, right, with the monetary system. So yeah, we'll see, right? The yellow folder FOMC events, you can see that just because they're yellow folders, they're FOMC related yellow folders. So they're still just as important to monitor and be careful of as a red folder FOMC day. They may not be, as chaotic, but, it is what it is. And shout out Nico, by the way. Shout out Nico in my private group. He ended up taking a short in there. Wait, was there SMT there? Let's go double check that. I don't think there was SMT there, was it? I guess there was right there. Oh, wait, what? That was the pound. Wait a minute. Yeah, there was. Nico, if you're on the call or if you watch the replay, good catch, bro. I didn't notice that. Yeah, it was right there. See that? But yeah, seeing the Dow do this, I mean, again, with this cracking correlation, with us delivering to the downside in the Nasdaq so close to the open, it's just outside of my rules, right? So, again, there's an argument to have taken that short. As you can see, one of my students took that short. Good job, Nico, as always. But yeah, it's not something that works for me. Just one of those things, right? You're not going to take every trade. I don't take every trade. And I'm transparent when I'm not going to take a trade. And I have no problem doing that or being that way. As mentors should, It's not sunshine and rainbows every day. Some days you'll lose, some days you'll win. But in this community, most of the time, we're correct on where it's going to go. But sometimes you got to adjust, right? And just wait for things, especially when you're in an environment like we are, dealing with shit like this. Yeah, you don't want to be too crazy because, it's not fun to blow accounts. You don't have to blow accounts to be a good trader, to develop that discipline. Some of us need that, though, trial by fire. But whether we feel like we need it or not, it's still not a good thing. It's not necessarily the most healthy thing you can do. There's better ways to do things. But yeah, so our dashboard is working. Okay. I'm glad that you guys see, or I'm glad that you guys have Top Step working out today. I see that Top Step's not having a problem. So that's a good thing. Yeah, we got this massive crack in correlation here, so we'll see what happens. Everything is still, like I said, to the downside because confirmation for it to continue going higher did not manifest. So in this instance, if I was looking to try to reposition, my objective, again, like we pointed out, if it was going to go bearish, would be the trend line liquidity, but more specifically now, we have these relative equal lows. I didn't realize how equal lows or equal these lows were. I just kind of saw this low, and that low, but that's a very obvious equal low target. So we'll see how it treats this open price in here. At this point, I wouldn't need it to get beyond the regular trading hours gap here for me to adjust back to bullishness, considering we are still inside that larger daily bullish order block. But I'm going to have to require this to be inverted. If that doesn't invert, again, our line in the sand will be up here. And, we don't require a massive amount simply because we're inside this daily bullish order block. It's also a weekly bullish order block, right? As you guys can see right there. So bullishness still could be a possibility all the way up to the 50% of this order block, right? So it may decline all the way down to there and still be able to get up there. But we don't just demand that if it's not showing it to us. This is where trading can be a little difficult for people because you'll overtrade and predict something too early and then potentially run into a problem. In this case, I mean, we could still go down to here and that doesn't upset anything, So, well, actually, let me see. Where is that? So yeah, these lows in here. Yeah. If you look over here at this chart, or look at the order block, right? I'm not saying buy at the moment, right? I'm saying still it's short. But if you look at this, where I'm highlighting right here, where that line is, it's still above the 50% line, right? Wait, Nico, you said that Top Step was working? Or are you guys having problems still with it? Oh man, Mike said it's down. Wow. Yeah, that's annoying, dude. Took a trade before it stopped. Okay, good. Yeah, that's brutal, bro. Yeah, I saw that markup. I shared it with everybody, by the way. Good job, Nico. Damn, that's unfortunate, you guys. I'm sorry you guys are dealing with that. You got to diversify, you guys. You got to diversify your funded accounts. Top Step goes down way too often. That's why that's why I've been talking about Apex, talking about Funded Next, talking about these other firms that have good reputations. It's because they're just, it's tech, right? And apparently they can't get their shit together. I don't understand. Like, this is people's lives. This is money that people use to live. Putting all our eggs in one funded company is like it's the same as having like one job, right? You're one source away from being totally smashed. And with trading, there's many different brokers and whatnot, but certain companies are trying to funnel their people into just their platform, so you don't even have the option. So yeah, here's that 650 macro. We got now below the open price. We're still inside the daily bullish order block. We have a big wick we're coming off of on this weekly order block. So again, that's something that I'm definitely monitoring. This wick in here too is very important. If we break to the buy side and we can't break through the 50% of this wick, which is right there, okay, that would be a problem. Overall, higher time frame wise, it would disrupt the decline in here, and this would then turn into a bullish run, right? But you see why I haven't chased it? Why I have not thought like, all right, let's just execute. You know, and also there's no model in there that's set up for us to do that other than this one, which Nico took part in, which again, that was a good move. But I'm curious to see, is this going to be part of the manipulation? Because a lot of times we'll reach directly for the open price at the open of New York, right? Reach for the daily open price. And then sometimes it'll just start to rip to the buy side, right? Or same thing if it's running higher, right? Ahead of the open or after the open. It may run into the open price on the daily, use that as counterparty liquidity, basically the Judas swing, and then start to rip people's face off to the other side because the higher time frame supports, you know, the other side, right? So all of this may end up being fake. My opinion, where I'm potentially going to look to maybe enter a short, if it does unfold, it's going to have to be if we invert this fair value gap here, right? I'm not going to take a run up into the highs. I need further confirmation in this instance because, again, we're at that higher time frame order block. So there is a chance for us to continue and get back up through the buy side. We are below this inversion fair value gap here, though. So as long as it stays below that, you know, it's really not overall looking to go higher yet. You know, maybe this sets it up and eventually we end up here with these equal highs. I'd rather take this as a market maker buy model and execute a little bit later in the second stage distribution. That's just something that I'm more comfortable with generally. And, you know, there's nothing wrong with that. Definitely, that perspective definitely keeps me out of bad trades. That's for sure. Yeah, because the fact that ES hasn't taken the previous day's high for the open, but Nas did. We are bearish in SMT for previous day's low. Yeah, that's generally a possibility when that stuff happens. The liquidity mapping list that I give you guys, those are not only for targets, they're also used for liquidity levels that are commonly used for counterparty liquidity. So basically, price going lower to take out previous day's low. So smart money can pair up their buy orders to then try to target the previous day's high or London's high, right? Or any combination of those pieces of liquidity on that list can be used as either counterparty liquidity or targeting liquidity. That's a drill, a study drill you guys should be doing every day or every week at least a couple times. It's very, very important to do that because you start to understand the relationship with liquidity, right? How each level is used to be one thing or the other, right? To be a target or counterparty liquidity. Right, so again, we're watching what this is going to do in here. We got the higher time frame there. Let me go pull up the DXY. Yeah, so we see that DXY. DXY is taking a nosedive. If we go look at it, it's definitely ran up aggressively, but now it's coming back aggressively. It's been doing a lot of this back and forth, nasty whipsaw type of behavior. Yeah, I can say that if this 4-hour candle gets overlapped, like you can see on this indicator here, this is why I have this indicator, this fair value gap in here, if it overlaps that, that's going to become a problem for this to go higher, because that'll be overtaking, basically balancing that price range, and it may be used as an inversion to go lower, and just an upper BPR. But we'll see. We'll see what it wants to do there. Right. So yeah. So 7 o'clock, if I'm not mistaken, creates a new 4-hour candle. From what I've gathered, I mean, there's different opinions, which is kind of strange. Some say 7 o'clock, some say other times. But from the ICT camp and people in the ICT camp, 7 o'clock is generally the open of the 4-hour candle, which we don't really see that on this indicator here, which I'm not sure why. Where the hell's the labels? Oh. So yeah, 4 hours here. Oh yeah, no, I guess it is. I guess it is the new 4 hour. So yeah, it's 7 o'clock. That opens the new candle. AM Pacific Standard Time. Okay, good. I don't know why the DXY it's not accurate. Or maybe I'm tripping. Maybe I'm tripping. So we've got a new 4 hour candle that just formed. So if there's going to be a power 3 that takes place, you want to think accumulation, manipulation, distribution. Same with the 1 hour candle, right? Which is right here. We got the overall 4 hour candle and the 1 hour candle formed right in there. So I'm watching this again. I want to see if we can get below this if I'm going to look to short. If it breaks down below that, I'll use that as an inversion. But we'll see here if it breaks above this. We also have that, was it a 5 minute? We have a 5 minute fair value gap there. And we'll see how it wants to treat that. We got an order block here. We're seeing that wick. That's a pretty strong reaction from that. So like I said, I require it to get down below this. That would also turn this to a bearish order block. And then again, we'll look to slide that on down to this level if that's going to be the case. We got to see how it's going to react in here. Correlation is literally all over the place again. So again, we got to be very cautious. We got to make sure that we are waiting, not being too crazy. Oh, freaking stomach is growling. Ugh. So you see that 5 minute fair value gap right there? Gonna watch that real quick. Yeah, correlation is just all over. Still got the Dow as a strength holder out of the 3. It's definitely inverted its, what is this, 8 hour fair value gap? It's inverted this gap in here. See, we've got an order block here, order block here. We're really contesting the 50% of that. So we also have a wick in there. We've got a fair value gap here. It's pretty much in alignment with the 8 hour here. So if this stays above this, that's an early sign that it's going to turn and keep going higher. But again, if there's a crack in correlation across the board with all the assets, again, you're put in a situation where it's low probability. Okay. And we are not a channel that calls out 500 trades in a day just because like I have some urge to get you in a trade. I have no urge to get you into any trades. You know, I have an urge to get you in the right direction so you can get into your own trades. So you can be independent and try to provide for your family independently, right? But, you know, when I call out a move, I'm not sure what you call that outside of a signal. If I say, oh, I'm going to short if it gets down into here. I may potentially look to see how this behaves, maybe look to buy up into here. I mean, that's pretty much a signal if you ask me. I'm just not saying, oh, put your stop here, guys. Put your entry exactly at this price level because this is my model. This is what I want to use. You know, I could do that, but everybody does that. And not everyone succeeds, you know, off that. So I like a high rate of success, okay? And that comes from independence. Because you trust yourself when you do things that way. You know, any other way, you're developing trust for somebody else's ideas, not your own. So I think that personally is a problem. But hey, social media is what it is though, right? So yeah, like I said, we're watching this gap in here. It's holding it. If it was to invert that, that would make me pretty confident it's going to go higher. We do have this low to that high being violated. So from that low to that high, it's buy side, sell side. So market maker sell model delivered in here. So now if we zoom out a little bit, we may be in a larger sell model if it does look to go lower as a result of this 8-hour fair value gap, or was it an 8-hour? A daily fair value gap inversion. And then the wick here being respected. So that may be what the overall tone ends up being. And again, not catching the highest move, there's nothing wrong with that. Catching a more confirmed move by letting price prove itself and then finding a continuation model of your model, because every single thing from breakers to the 2022 model have a continuation variation. They also all have an inversion, like I said earlier. I want to make sure that point is understood. So if you were to take like a buy market maker or a buy YouTube model, if it disrespects it, you may be able to see an inversion going the other way if there's a reason to justify that flexibility. Freaking Byron. Yo, Byron, send me a screenshot of what that thing's saying right now. Did it call anything already? I'd be surprised if it didn't call something. It still doesn't fit my rules right now, though. But yeah, you see. Go to the 3-minute. Those of you in my private group, if this wasn't so close to the open, this right here was a razor model, run on stops. We've got a PD array in there. You also see it right here too, run on stops, fair value gap, and then all the other different components. Right, you can kind of see it in here, you can see it in there. But again, if it doesn't line up with time, that's one of my filters. I won't take it. I wanted to see how this would behave too. So again, there's no buys being talked about right now. So if you guys are thinking buys, you are, at least if you're listening to what I'm calling out, you're mistaken. It's only valid, in my opinion, until we get up to here, unless we get up into here and invert it. And then I'll classify this as a market maker buy model. Otherwise, we're just looking for this to invert this fair value gap down there and see if it can't give us that return into it, and then use that as an inversion to target previous, I don't think it's previous day's low. Is it? No. It's previous PM session low, previous lunch hour low. Okay, let me see. So let's see how this behaves in here. We got a run on stops, fair value gap. All right, is there SMT up above these highs? Yeah, there's SMT at the highs there. So that's pretty interesting. So let's see what that ends up leading to. The S&P is respecting that regular trading hours gap. So that is definitely interesting. I think we have a SMT along all of this because of the Dow. Yeah. We got a massive SMT, the Dow going higher. But I mean, it's more of a massive cracking correlation, to be honest. We got higher highs there at the current highs, but there's SMT, so that's bearish. So, and then again, all the other things that I talked about that kept us focused on the downside, that pushed us away from considering the buy side, at least for the moment, all that stuff is still here. So let's watch this inversion for value gap in there. See how we could treat that. This high to that low, failure swing in there, getting down below this low, that's a mitigation block. Yeah, I agree with that, Nico. Until proven otherwise, beautiful people. SMT within the 15-minute fair value gap. Let's go double check that. You're talking about how one didn't reach into the fair value gap? Oh, there you go. Nico, good eye. That failure to get into that fair value gap right there is SMT too. That's a type of SMT. Yeah, the Nasdaq too is the weaker of the three based on that. So let's actually move that up a little bit. I'd rather use the 15-minute than the 5-minute. So yeah, we'll see with that being the case, we'll see what happens. What the hell just happened? Where's the... Okay. So that's what we're watching right here. Watch this fair value gap here specifically. We are outside of the macro, which I don't necessarily like. 5 minutes after is okay, but you know, we're just gonna have to keep observing, seeing what that's gonna do. But for now, it's still going lower. There's really nothing to punch against that, especially if we were to invert this. I don't like how it's stalling around this. We want to see speed through things. But I mean, this right here, if it breaks down below the fair value gap there, we've basically balanced that little range in there too. So yeah, DXY is still going lower too. So it's definitely suspect. Some assets lying right now. Someone's lying. Who is it? We got to figure it out. We don't know. We don't fully know because everything's all over the place correlation wise. But you know, hopefully you guys haven't, you know, took it upon yourself to take too many trades and just go overboard. It's not a day to do that. Just because you saw it drop, look what they did. This is what they generally do. When it's a fast movement like this to start the day, right at the open, they generally got to pause. What are they doing? They're accumulating orders inside this sell side liquidity, either to load up and go lower, basically continuing the power of three bearish, or this could end up loading up the buy side, right? Inside of the sell side liquidity. If they're going to still use this higher time frame bullish order block, which is also a weekly bullish order block. We also have the wick here that still may hold, right? If we're going to be going short, we need to see this rapidly continue. Otherwise, we are in a risky moment in price action where, you know, we're stalling at equilibrium from this low to that high, which is generally the case. So we're stuck inside the 50%. And if we can't get down below this, I have no trade to go short, right? And in order for me to buy, these are my criteria. In order for me to look to buy in this price action here with what's happened, with what we're presented with, we got to get up beyond this fair value gap. We could use the 5-minute like I had pointed out earlier. Getting above that 15-minute fair value gap though, then using that as an inversion, because it's a larger time frame, it'll be a little bit stronger confirmation. But I'm in no way willing to pick this low to go higher, and I'm not willing to take a short in here unless we break down and get through this level. Let me see. Carlos said, I gained access to the account and the order was still open. Managed to close it at break even. Okay, good job, bro. Good job, bro. It's all about managing risk. And Mike, yeah, you're right. That's why I'm hesitant right now. You know, there's too much chaotic smokescreen of lack of correlation happening for me to just jump in. We do have that SMT though, with the Dow and the S&P with the Nasdaq with the fair value gap on the 15-minute. So it seems at the moment that that's still holding up. We got this order block here. So if we break down below this order block too, that's, you know, double shift, and then also we'll have an inversion to go off of here from this lower time frame. Okay. And the best sells come from above the open price or next to it, at least, if it is going to be bearish. That's what I'm favoring right now until proven otherwise. You know, that proving otherwise means we get up beyond the 15-minute up here, or at least the 5-minute inversion, or normal fair value gap that could turn to an inversion. But yeah, throw one in the chat if everything makes sense. Why I've been hesitant this morning, why, or what the red flags are, the current condition. Hopefully, I've been able to describe the condition to you guys. good enough so you understand why it's a time where we need to just pause instead of me just saying, oh, well, we got to just not do anything right now. Have like a very vague, not descriptive type of situation go on. Hopefully it's been pretty clear. Yeah, we talked about CPI tomorrow too. Talked about the lower risk. Nico, you know all this, right? You're always with us. Nico has a YouTube channel, by the way. If you guys want to follow another trader that is pretty spectacular, go follow his channel. He just started his channel. He's from the private group. He does pretty well. So definitely go check out his content. Him and Harley. Harley hasn't really pumped things out yet, but again, we're trying to do our part to make this industry a better place. And I encourage all my students to start a YouTube channel. You know, show the world what's possible. You know, show what you've learned, and let's make a difference together. You know what I mean? Only if you're comfortable with, obviously, making a YouTube channel. Don't just do it just because. You know, you got to be confident in what you're doing, and not swayed by negativity, because people are negative and stupid idiot assholes on the internet. Okay, it's just kind of it comes with the territory at times. But you know, sometimes it's good feedback too. You know, the people that are kind of aggressive are not necessarily always bad, even though they're, you know, they may be approaching it in a pretty nasty way. So yeah, this would be something I'd be observing here. Only when it breaks down below that and returns back into it. And yes, the stop will be this size if we can get down to that. Got to run on stops, break down below. This down candle becomes a bearish breaker. This high to that low, failing to swing above that high becomes a mitigation block. This low in itself to the high, breaking down below that becomes a bearish breaker. So that is justification and reason why I would be identifying this inversion in here as something possibly worthwhile. Not just the simple fact that it is a inverted fair value gap, right? But it's going to have to break through this. This is not an entry right now. It needs to do a certain, you know, mode of operations, right? It has to have some more things unfold. And if it can't get down there and it runs back up here, then it's off the table. I'm not going to look at it anymore. Right, we've got the first presented fair value gap up here. Never even returned back into it. So we're below the overnight first 30 minutes of the daily range. From the open price, we're below the regular trading hours gap. We're below the first presented fair value gap. And we're also below the overnight equilibrium from this high to that low. So those are all real-time signatures, plus the breakdown below this, right? The refusal to really accelerate to the buy side. You know, couple all these things together, and it just starts to make sense that something as obvious as these equal lows down here becomes pretty relevant. Right? So let's see if we can get displacement in a fair value gap. Once we trade through this and it comes back and retests it and doesn't break through it, that's now balanced. If we break down below this low to that high, that'll become a balanced price range too. It'd probably turn into a order block. Yeah, see, we have the order block there. So look at that too. Look how that lines up as well with an order block as on top of that. So there's lots of pieces in that price delivery that would justify this potentially being an execution. Of course, it'd be at half risk, just given the week. Okay, it's not going to be, you know, a normal risk as if this was where we took the entry at. Up here, if it was a normal week with no crazy news events like we've been talking about, and it wasn't the start of the new quarter and it wasn't in December, that would be a moment or a type of area where you would put normal risk. especially if it's within like the first macro after the open price for New York. That's like a loaded deal, especially when the higher time frame sets up. And that'd be where you would put your normal risk, whatever that may be. But once you have to catch a continuation, your risk has to be cut. Okay. Again, this is not an execution to take right now. I know it's not something that was taken earlier. We're waiting to see it verify by breaking down, inverting that, and then we could look to target this as our opposing liquidity. But like I said, if that fails to get down there, we have no setup. And that's kind of just the way it is. We can get mad at it, try to attack the market, attack ourselves over it. Oh, I should have got in earlier, whatever the hell you want to talk about. But it's irrational and not worth it. Don't do that. So now price is looking like it's giving a pretty solid response. We see that this is a new week opening gap here as well. You could see that label in the chart. So it's holding inside that. Another reason why this fair value gap would have been a great opportunity to go short if it inverted it or broke back down through it is because of this as well. There's a lot of layering effect going on in there. Let's go look at the DXY. We got the bonds looking like they're trying again to push to the buy side. That's a good sign. If we're going to look to see a turnaround here. We do got relative equal highs up there. So yeah, we may see this continue to run higher potentially. We got the yields wicking, supporting downside in the DXY. DXY tanking. Currency's looking to finally rebound and go higher. So this may lead to this being a simple run on stops. Okay. To then shift back to the buy side. And like I said, what is going to trigger us in and give us the ability to take another potential buy? The SMT in here is about a turn off. So it was good up to this point. So that was another reason the SMT there with the fair value gap, why this breaking down below this would have been a good opportunity. It just didn't manifest, you guys. And I hope you guys haven't been pushing too hard today. And say it again, just this week in general. Because again, I've gotten 6 messages this week about pushing too hard when I've explicitly said, please just relax. Okay, it's not a time of the year to push and buy 15 funded accounts and try to pass them this month. It's just not, it's not that time. In my private group, we've done pretty well. It just shows that you can still be profitable in any condition, but the level of experience that's used to allow that to happen, not everybody has that. So, don't think that you have to trade during times like this aggressively. You never have to be aggressive. I'm not aggressive, and I do fairly well. So just relax. Let's end the year on a good note, and let's see what price wants to do in here with this price delivery. That's a pretty vicious move, pretty solid whipsaw. Now we got a low, high that took out the high, and then a lower low. That would turn this to a breaker also aligned with the inversion fair value gap in there. This here should leave a balanced price range. Run higher, buy side taken. Run lower, sell side taken. That's a new dealing range in itself. But again, if it was to displace, like I pointed out here, that would potentially turn this into a potential sweep to reversal. I don't believe that we'll leave these equal lows available, though. Given what we're seeing here, it's having a real hard time. We're inside of a mess, right? This is an absolute mess. It's just been stalled out since the macro over here. So one macro, 550 to 610 a.m. Pacific Standard Time, set up the decline. The next macro after that set up the reversal, right? And then since then, it's just been going sideways below the open price, bouncing back and forth from the daily open. Inside of this new week opening gap, inside the daily bullish order block, okay? So again, just trying to review the lay of the land, like what's available to us. Again, if we do short here, okay, it looks like it's going to turn that on. I want to see if we can get through it and then come back into it. We'll see how this behaves, though, this little characteristic in here. If it fails to even attempt this at all and just starts to rip, again, this is a BPR in there, what I call a rolling BPR. Basically, bounce price range inside of a range that's delivering towards a specific level. So let's see how this behaves in here. Let's see what this does. Then we also have this that we do want to monitor as well. At least keep tabs on it. So yeah, let's see what happens. It's going to give the first opportunity, or is it going to continue to play games? I'm assuming that it'll be able to potentially get down there. You know, it's hard to demand things when we're in consolidation like that. So I would definitely, again, it needs to break through this and then come back into it. So this is actually another situation I'd like to point out as well for those of you in my private group. Breaking down below this, couple that with the inversion. What is available in here potentially? Like with what's happening? Think about it, right? If it was to break down below this, say it didn't do this displacement just now because I turned it off kind of, unless it was to get back down here. But if it didn't do that and it came back up into here, made these up candles and then displaced through this low, we have a run on stops, fair value gap, and then a breakdown below that low with the inversion. What do you guys see there? Right? It's definitely something that we talk about all the time. So hopefully you guys see it. But yeah, so now we got this small little slight run on stops. You see how it's failing to break through this? That's not a very strong indication that price is going to in fact go lower. Yeah, you could say that 2022 model. But it's our Razor model. Yes, sir. Our Razor model components are in there. Yeah, look at this inversion here. Let's see how this behaves. We got down movement, stop run. So that's stop run there. Let's see what happens if we can get above that. You got to think too, everybody and their mama is trying to short right now. This one right here too. Carlos, think about that one right here too. Not sure how much I trust buys at the moment. I don't really trust either until things happen, like going down below this or maybe break above this. This low, higher high would become a breaker. Then we could trust this up candle. But I'm not willing to engage something inside of this range in there. You know, it's 50-50, right? When it's stuck inside this like this. If we were looking at this higher time frame, based on what we've seen so far, it does look like it's favoring downside a little bit more. So again, and it's broken through these levels too. So again, we need a good amount, preferably to buy. For me to be overwhelmingly confident, it's going to have to break through these levels, and that'll put me in position to then navigate a market maker buy model. Just to reiterate something we've been talking about all morning. But that's kind of where my head's at. We still got the SMT here. Nasdaq is still refusing to get up into that fair value gap, so that's very telling. Even in the face of this little jump up, we're outside the macro, so maybe it's going to wait till the macro comes into play. But I still got my attention down here if we get down below this. But price is cornered. So whatever it does, if it breaks above this high, great. You know, we'll look to see if it can get up above here. Then later on, we'll look to try to buy up there. We are keeping tabs on this wick here being respected, the inversion here. That's why I'm more so favoring shorts more. but we're stuck in consolidation, cracks and correlation everywhere. You can't just have like, oh yeah, I'm 100% it's going to do this or do that. You got to be able to be flexible because it's very demanding in this type of price delivery. Look at the chat. Did I record myself today? Oh, nice. Yeah, Nico, if you want, you could post that in the indices chat in the private group or in the Rising Funded Traders chat. I'd be curious to see it. Or if you post it on YouTube, just send it that way. This could be a fake out. Yeah. Okay, I didn't miss anything. We hit equilibrium at yesterday's range, and now it's accumulating liquidity to run again. Yeah. Yeah, I wouldn't doubt it, Carlos. I'd agree with that. So yeah, we're now finally getting down below this. We've now failed to get up above that. So it's very much having a hard time trying to go higher. There's SMT at the highs up there inside the fair value gap on that 15 minutes. So, okay, now we broke down below that. So you got to also, you can consider if we can get back down below that. So we got the run above, breakdown. Yeah, let's see what we could do there. I don't like the fact that it's got equal highs up there, though. Oh, there it is. See if we can't blow out that low. I'd very much like to see if we can get down to there. Maybe that's asking a little much, but I'd be satisfied with this. 1-to-1. See if it can't break down below that. Also got the 50% of that wick in there. Maybe something that gets targeted. It's basically right below this low. But yeah, like I said, this fair value gap is going to be very useful. So let's see if we can get a follow through. We may not have much of a follow through today, though. That's what I'm saying. Oh, there it is. And that's enough for me. That's enough for me. Well beyond. So it was at 44 points. Thank you, market. Yeah, see that right there? If you ask me, me saying that if we break down below this fair value gap, I'd most likely look to try to take a short and then aim for the low down here, or simply 20 to 30 points. That gave me 44 points, so that's cool. Or if it was going to buy and it gets above the 15-minute up here, that's when I would look to buy. Otherwise, I'm looking to short. If you ask me, that's a pretty clear signal that I'm giving. Not necessarily a signal, but it's an idea to make you think about things. Right? If you ask me, because people say, oh, why don't you give signals? Why don't you this? Why don't you do this? Why don't you do that? Bro, I do. Are you just like not paying attention? And normally they hit. And if I'm unsure, I'm honest with you guys. Like today, I was a bit unsure until certain things took place. Fritz, amazing watch. I appreciate you saying that, Fritz. So your navigation and patience is second to none. Honestly, bro, it's taken a lot. And if I'd sit here and be lying to your guys' face if I said that I am just like cold, stone-hearted, like overwhelmingly patient with no inner battles that go on, I always have that tug on my heartstrings saying like, okay, well, you know, we're going to miss it. We're going to do this, do that. And of course, I tell you guys, we got to fight that. Every time we feel that in our head, we have to start speaking things differently. Even if we're thinking it, something negative, you got to speak positivity. You got to speak discipline in the real world. Like when I used to not be doing streams and whatnot, and I was just trading on my own. I'd literally be sitting there telling myself, I'd be thinking some negative crap, and I'd be like, no, I'm patient. I'm doing what I need to do. I'm not going to overtrade and over leverage. Sometimes I go against it, and I had to work myself out of that over time. And nowadays, if I tell myself to do something, I'm going to do it. I'm not going to break my rules. If I say I'm not going to do it, I'm not going to break my rules. If I'm going to take an execution here or there, I'm not going to hesitate, right? Here in those that may be thinking I am not actually doing things, right? There it is. Okay, there it is. Right where I called it out. Okay. So yeah, I'd be sitting here lying if I said that I'm not sitting here with a struggle going on. The struggle was real inside this in my mind. I'm not going to lie to you guys. I was sitting here thinking like, okay, do I really trust it if it gets down there? But me speaking the things that I was observing, what was in my head, what I know about price action, if it got down below there, that's my signal to go lower. We're outside of the macro, so it makes it a little bit harder to trust. But I knew that if we get down there, or had a assumption that because this equal low is so obvious from earlier, I mean, why would we overlook that? And again, this low here being taken does not upset anything over here on the larger grand scheme of things. Okay. Let me see what's going on here. But yeah, how did you guys feel about today's call so far? What do you guys think? Did you guys learn anything from today? Did you guys maybe reinforce certain stuff? This is a type of condition that can be very difficult for people. With the Kraken correlation all over the place, did that stop us from taking a trade? Did that make me hesitate on my execution? Did I drop my risk? Absolutely. But were we scared at all? Were we hesitant at all? We literally laid things out and executed when we needed to execute. Yeah, and Byron, you see what's going on, right? The Razor model beautifully came to fruition. Again, a little bit larger order block than we would like. Generally, we like a smaller one, but nonetheless, you go up and it's an order block. Okay, so our flagship in the private group strikes again, right? I think, is it a 2022 model? Let me see if there's something else. I mean, you could still look at this from a 30-second chart as a 2022 model too, right? We got the run on stops, run up, and maybe you would have got stopped out though, because maybe you took an execution here. But if you put your stop above the second fair value gap, like the rules state, and you trusted the SMT up there was going to continue to drop price, you should have did pretty well. Damn, could have got. I should have just held to the full target, right? It's always that way. I always take my 20 to 30, right? But this time we got 44. Wasn't too bad. But again, me saying that is actually going against the rules, because on FOMC weeks, NFP weeks, CPI weeks, weeks inside of the start of a new quarter, the start of the month, the end of the month, those are times when I solidify only 20 to 30 points minimum. And if I can get more than that, like you saw today, how it aggressively forced me to take more, so be it. I'm happy with that too. I don't need more than that. I'm not here to impress anybody with catching thousands of points. I'm a consistent trader, and I prove it through my students. I prove it through the things that I call out, and that's enough. You know what I mean? You could put two and two together and what that would lead to, and if not, there's there's a lot of, entertaining people that aren't profitable, but entertaining, that we can go waste our time watching, but, kind of just is what it is. You want to submit to the 20 to 30 points. If you're not consistent yet, submit to 20 to 30 points. If you've been aiming for something more than that and you've been struggling, but you're able to capture 20 to 30 points, but you just haven't been taking them, why are you doing that? You could scale up 20 to 30 points to be 10, 20, 30, $100,000 a trade. You just got to have enough capital. And if you have enough funded accounts, if you have like 5 or 10 funded accounts, just stacked on top of one another, 20 to 30 points with half risk on every trade, securing like like $200 to $300 a trade, maybe a couple of times a week, multiplied by 5 or 10 funded accounts, you're keeping your risk very low, as you should in a funded account, while maximizing the profit gain safely, reliably, responsibly, professionally. Okay. And the risk doesn't hurt when you take a 0.5% loss. You get like a ton of trades to be able to recover if you do go into drawdown by doing things this way. All right. Yeah. I wish we could put the Discord parrot, bro. Our 20 to 30 point parrot. Carlos, how about this? Carlos started with me on YouTube. Mike started with me on YouTube. Can you guys give everybody feedback on the 20 to 30 points? Did that help you change things in your trading? Has that been beneficial to you? If you weren't thinking about it before, has that been beneficial to you? And if so, if you can elaborate on how, I would love to hear that. And I think everybody would, maybe people that are resistant to this, they're just not willing to make that adjustment because they think this or think that. Oh, it's going to take too long. Oh, it's not enough. If you guys can give me feedback on that or give the group feedback on that, that'd be wonderful. Because I get a lot of pushback on that. Why? That's not enough, blah, blah, blah. But, bro, it is enough. I guarantee you it's enough. You just have to know how to trade. But, yeah, if any of you guys in the chat actually have made that type of adjustment, I know some of you guys have. But if you guys would like to share with the group, that'd be great. I was gonna say something. I forgot what I was gonna say. Let me see. Fritz said, "Happy to have been able to see it as you navigate." Yeah. See, we're like Houdini out here, yo. Like I said, we cornered price, right? Up here, I was saying that we cornered price, whether it was going to break above and get up here and give us that market maker buy model idea, and then continuation above with a deeper confirmation, or if it was going to break down below this and then give us that inversion fair value gap razor model from the private group, or the high up here, it's a 2022 model. Obviously, this model down here using our, my personal model that I teach everyone in the private group, obviously that was a little bit more conservative. But you guys know my style. I'm a conservative trader. I'm not like aggressive. Maybe I could be a little bit more aggressive, but I'm just not. Why stress myself out and do things that I know with the wisdom that I've had over the years is unnecessary. It's unnecessary to be aggressive, right? Eventually there's times that call for you being aggressive. Today's not one of them. Okay. This week and this month is not one of them. Damn, bro, that thing ran 175 points. I should have held it, damn it. Hey, rules are rules, though, yo. Rules are rules. Yeah, that was spectacular. Exactly from where we identified it to drop. Let me see. I missed some things. Yes, I recovered a drawdown account when I started targeting 1-to-1 instead of 3-to-1 only. So yeah, like basically 30 to make 30. I think you were in drawdown when you joined the group too, Carlos. Am I correct in that? I think you were talking to me about that. I can't remember if it was you. I think it was you. But you came to the group, and I mean, you've had a spectacular turnaround. I feel like from what you shared with me initially to now what you're doing. I mean, you're just knocking things out the park. Mike too, and many of you guys that started with me here on YouTube and are now with us every single day. Um, I don't know. It's humbling to see how things change. It's reassuring to me that I'm doing the right things as a mentor, because that was always something that I was hesitant on or doubtful of myself with. I didn't know if I'd be able to teach this in an effective way. That's why, I didn't start teaching like right away. And we didn't have a private group until my students told me to make it private. Um, but yeah, it's pretty amazing. Zulu Kilo, yo, what's up, bro? Is this your first time hopping on the call? Welcome, if it is. Uh, hopefully you got to see this, because that was one of the more spectacular things, right? It is? Okay, cool. Well, yeah, welcome, brother. Much love. I appreciate you spending time with us. You could be anywhere else, but you chose to be here today, and I hope you've been able to get some value from today. And hopefully we see you more. We do this every single Tuesday generally, but we did it today because I wasn't able to hop on yesterday. And then we have Sunday prep calls on Sundays where we basically discuss what we think the overall market's going to do. We talk about bias and narrative every week, because that's the main goal. I'm trying to get everyone clarity on this YouTube channel. And then, of course, if there's more work that's required or more support that's required, for students that need that, that's available as well in my private group. But, not everyone's going to need to join that, unless you want to, hang out and get a little bit more support. But here on this YouTube channel, I have students like Fritz. I have many, many students. I have Tony, who are passing funded accounts or working their way to that just off of what we talk about 2 days a week. And clarity is getting achieved every day pretty much from the testimonials. What time? So on Sundays, I'm in the West Coast of America, so I'm on Pacific time. So every single Sunday and Tuesday, depending on the news for Tuesday, it's going to be around like 5 or 6 a.m. in the morning we'll go live. But generally on Sundays, it's always at 7 a.m. Pacific Standard Time. And if it changes or, maybe isn't going to be at that time, which generally isn't the case, but if it does change, I'm very vocal about it. I also have a free Discord if you're not in that. And then, of course, I have my private group too, but you could definitely join the free Discord and just join me every week. We can hang out, and I'm sure 100% that you'll get value from this community. Not only me, but the students in the chat, the ones that you see that are that are very active. They're all really good people. We're all here to lift each other up. There's no negativity. No questions are dumb. No questions are irrelevant. Doesn't matter what level you're at. Doesn't matter what question you ask. The whole point in this channel is to just help. You know what I mean? It's to give you guys clarity, to share my wisdom that I've developed over the last 6.5 years, and try to get everybody moving in the right direction so trading can change their lives. I can't guarantee nothing, obviously, and I'm not a financial advisor. But what we do here, we've been doing it all year. I've been live all year calling the market. And in terms of bias and narrative, where price is going to go, I've proven at a high 90% accuracy that what we do here is there's tons of validity to it, and it can help all of you guys learn to call the market. And then you just have to do the rest. You have to find your model. You could be on these calls, and I help you guys see that process. But yeah, clarity is the goal, and I feel like we've done a very, very good job getting traders that clarity and basically proving it all year for the whole year straight that what we do here is very systematic. It's repeatable. I'm not a rocket scientist. I don't make things overly complex. I try to simplify stuff while still giving ICT the credit he deserves and not making people feel like I'm revamping things, because I'm not. I am a purist with ICT Concepts. I have my own model that I've constructed that encapsulates 4 different models, 3 main models, but 1 extra model. And that the whole thing just makes my model. and we're able to identify, different opportunities. And, I talk about those models a lot, and from breakers to the 2022 model to the one we call the Razor model, which is my model. That's one I've personally created on my own, with very specific um, confirmations and protocols. But yeah, all that stuff is talked about, and every week, again, we're here faithfully every week. I'm feeling a little bit sick today, but whether I'm sick or not, I don't give a shit. I'm gonna come and hop on because I'm here with a goal to get you guys to be successful, or not get you successful because I can't guarantee that, but get you in a position where you can do that on your own. You can get to your goals on your own, you know, and I feel like trading is one of those blessings in life, and we're a part of a small minority in the world that even know about trading, or even smaller minority in the world that believe that we can do this. So I feel like me doing my part to help you guys get to where you're trying to go, or at least get in the right direction. I feel like that's, passing the blessing that I've been gifted forward, so see, I always thought when I first started that, I'd love to be able to pass it forward, and I'm grateful that you guys have given me the chance to do that. And I'm seeing a lot of the progress, and I'm grateful. So yeah, and Zulu, like I said, welcome, brother. I hope to see you more. And if you ever have any questions, let me know. Definitely follow me on Instagram if you haven't already. I post a lot of psychological things and little tips here and there from these videos that I feel are very important. I probably need to post more of those, just so more of the value in these calls can be spread far and wide. So, because these are long calls, admittedly, but I mean, they're jam packed the whole entire time, with me either answering questions or breaking down the market, showing the process, letting you guys inside my mind, so then you could see the different components to things and how everything fits together, and how everything meshes on top of one another with this layering effect of information, and then how to effectively go in there and trust things with validation principles, uh, the different models I use, how you can be confident in your own model, you know, and just everything in between, right? So yeah, Zulu. Again, appreciate you spending time with us. Um, I always appreciate the students that hop on here that are new. But yeah, let me see. Zulu said the short call was solid on this one. I was waiting for at least the premium to hit before I went short, but yeah, yeah. Sometimes you're talking about a premium up here, right? Is that what you were referring to, like from this high up here to the low? So yeah, there's nothing really wrong with that, except the fact that we had the SMT here, which let me highlight that real quick. So the SMT here with this fair value gap, on top of this fair value gap over here being overlapped by that creates what's called a balanced price range. So there's not a necessity for price to want to get up there. If it's going to continue to drop, there's not a necessity, especially the trigger being, or especially the confirmation with this failure for the Nasdaq to reach up into that fair value gap, while the S&P did. But then you can also see this SMT is happening where a fair value gap was overlapped by another fair value gap. So that creates what ICT calls a balanced price range. So with that being the case, we wouldn't necessarily look at things from, say, this high to that low and look for price to go up there. Because that balanced price range idea is in the way, because that SMT is present in the chart, it didn't have to go up there, right? It's more so not going to go up there. And if it does go up there, like I said earlier, that would change my opinion. And if we got up above this, we would then go try to seek buys and be flexible with it, right? Letting price speak to us, and reading the story that it's telling us. So hopefully that makes sense. If you want to put that in your notes, put that in your journal about a scenario where you're not going to expect a premium to be met, and it's related to a balanced price range being formed, and then being able to spot that SMT taking place within that area that you would expect it to try to go up there. So those are the things that prevented this delivery to get up there, and it just continued to melt, right? And that's why I was pretty hesitant to try to even consider a buy. So if it went into a premium, your bias would have shifted more. Yeah. So it would have basically had to have, maybe not, not so much if it would have barely reached up there, but if it smashed through this down movement, which is a 15-minute fair value gap, basically digging deep into a premium, that would leave behind a different balanced price range, right? Because it'd be sell side delivery, buy side delivery, inverting. And so it wouldn't necessarily be able to, or it wouldn't necessarily build confidence that's going to keep going lower unless it was to, run up a little bit, still leave a portion of that available, and then displaces again, which in that case, we would then look to continue seeing if it could shift market structure continuously, provide us with one of our models towards this low. But yeah, essentially, if it was to get up beyond this, deep into a premium from this high to that low, because the balanced price range was already present over here, time frame was that on? Because this had the balanced price range here, right? The overlapping fair value gap here, followed by a displacement candle overlapping that. This, you could see right here, if we drag this over, right? You see how it never even got up there. It couldn't get up there. Another thing too, you see the failure to even attempt to get up into the 50% of that wick. That's a very heavy market, heavy bearish market. And then of course we got the inversion here, which the candle closed below, and that was basically the root cause of the delivery to the downside. But yeah, if price essentially would have went beyond to a premium with where like you were looking for it to go to, I'm assuming if you use this high, go from that high to that low, you're assuming for it to basically overtake this fair value gap. Essentially, because that's what it would have done if it would have ran up there. I would not have wanted to see that take place, right? And if it did, I would have to see it immediately respond back to the downside to continue to trust short positions. Otherwise, this scenario that I just framed out, if it was to get outside of this 15-minute area and then also not leave behind that bearish SMT, it'd be less bearish for me, or less trustworthy bearishness for me, right? So hopefully that makes sense. Hopefully that answered your question. What if it just wicked into the fair value gap and then not close? That's a good thing to point out, because if that's the case, we're not fully breaking through it, and it's the wicks do the damage, the bodies tell the story. So if it would have just wicked up into this level, that would have been permissible, right? And then if we closed down below, down to this level again, right? If it stayed down here, but the wick was a little bit larger, that would have been permissible. But part of this move being trusted to be exceedingly bearish and target the level that we were looking at was the SMT here. So it left that SMT, which was a sign that basically it wasn't going to really want to go up there anyway. And if it did, it probably would not have wicked up there. It probably would have overtaken this and then turned around. But hypothetically, if it did reach up there with a wick, I would not want it to go too deeply, right? Maybe it came close to the 50%, but that would have taken off one of the indications, one of the signals that I was using to further trust the short position, because we had that SMT present with the fair value gap between the indices. But if hypothetically it did wick up there, it still would not have invalidated the level. Definitely though, if it would have wicked and got beyond this wick here, basically got outside of this this 15-minute fair value gap, it would have been something I would have been very, very, very skeptical of. I would have needed a lot to really get behind it. But yeah, you see that massive run? Damn, looks like the move that was called out that we were a part of literally was pretty dramatic, right? That was literally like the high of the move, right? I mean, that's not like a rarity, right? Like we're catching a lot of stuff like that. Not all the time, but a lot of the time. But yeah, that was pretty spectacular. It's one of those days, right, where rules hurt, right? Because it's CPI tomorrow, because it's NFP week, because it's, all these things, the cracking correlations and all this stuff. It's just not something that I'm willing to hold for a dramatic amount of time. because a lot of times these days we don't necessarily see this type of stuff take place. A lot of times it's a chop fest. One argument that could have been made, though, these are small ranges, right? We're going sideways. So small ranges lead to large ranges. And these large ranges, like this candle is going to be, lead to small ranges. Okay, so tomorrow, there is CPI tomorrow. So maybe CPI kind of upsets this theory, but large ranges lead to small ranges generally. So if this happened and there wasn't CPI tomorrow, the next AM session, depending on how London worked out, right? Like if London consolidated too, the next AM session would probably be a bit chaotic, especially if London continued to be fast as well after we had a large range day prior to London. So yeah, that's something you want to note if you haven't heard that before. Large ranges lead to small ranges. But yeah, this is pretty spectacular. We literally just called out a move that ran 200 points. All you had to do was capture 20 to 30 points. I captured 44 myself, right? All I was aiming for was 1-to-1. End up getting a little bit larger than 1-to-1. So 1.5-to-1, basically. But yeah, could have held it for longer. And honestly, being in this trade, if I didn't have the rules that get me out of trades early in scenarios like this, price going down here, you got to think, okay, if you're in the trade and price is in profit like this, and we're targeting the low down here, you got to think, is price, this is the right way to think in price action when you're in a trade. Is price supporting the move that I'm involved in? Okay, meaning, are fair value gaps holding price? Are 50% of wicks being respected when they're violated and coming back into them? Is that respecting price on a closing basis? Okay. Are order blocks being traded through, traded back into, and then respected up to the 50% level, like this one was, like this one was? Are highs being left intact? And if they are being swept, is it immediately leading to declines in this bearish scenario? And is our target still viable, right? If you ask yourself these things rather than, oh my gosh, is it going to stop me out? Over time, you're going to rewire the way that you're feeling in a trade. All right? Because your thinking is what makes you worried about things. Our thinking as traders is what gets us out of trades early when we don't need to, unless you have rules, which you're following, which that's, I followed rules today. But outside of you having rules, your thoughts are what gets you out of trades. That's what makes you lack confidence. It gets you to exit early. It gets you to hesitate. It's your thinking, not price. It's your thinking. So if you understand technically what's going on, and you're able to then eventually put your mindset in line with your technical skill set, you're able to do a whole lot more in terms of being calm, in terms of holding trades, being confident in holding trades. We all throughout our whole career will be able to make improvements on this. I myself can do the same. I'm not perfect. I've never claimed to be. I'm not the best trader. I do pretty well. Okay. And I know what works, and I'm able to help you guys because I know what works. And I know what I struggled with after working with 200 people over the last, not 6 years, but last 4 years that I've been teaching or just sharing my opinion, right? I've discovered lots of different things, lots of different problems I've been able to help traders overcome. All of it comes back to setting rules around your problems. If you overtrade, set rules for it. And if you refuse to follow the rules that you set for yourself, that's where a lack of confidence is going to come in. The beginning of your self-confidence, the root of it, is how much you trust yourself. How much do you believe your own words? Because you're constantly talking to yourself 24 hours a day. Is it a negative conversation? Is it someone that's not trustworthy? This is the more like outside of trading type of thing that impacts you as the trader and your ability to succeed, right? And these are things that, I've had to work with traders to get them over, to help reshape their mindsets. Part of what this community is. It's part of what the private group is. It's part of, these lectures. I'm trying to get you guys to have a different perspective, how to manage a trade the right way. you know, how to read price action and the story, the beautiful story that it tells us every day that we get a chance to read and engage upon, right? There's a lot to it, but you know, being around the right community, you have the right information, ICT's concepts, and anyone that's teaching ICT concepts, they should be able to do what we did today and what we've been doing basically the whole entire year, accurately. You know, not perfect, but you know, high success rate. That's for sure. You know, high accuracy rate. You know, and if they can't do that, they're not worth listening to. It's just noise. It's gonna really mess you up. So, you know, again, you know, these calls are meant to obviously help you guys think properly. Hopefully, what I just talked about in this related to, you know, reading price properly and understanding the relationship. Hopefully, the concept of that makes sense. Hopefully, you can go back and back test maybe, and try to use some of what I've just mentioned. Use some of the things that we've talked about today and stuff that we talk about on the Sunday calls throughout the whole entire year. Hopefully, you guys have been studying it, like all the different components. I did give you guys that list this morning of key elements, key topics that help us stay in tune with the market and basically have the performance that you guys see me put on every week. Not only me, though, with my students, too. I had a student earlier that, Nico, that took a short earlier. I think he took the short up here, if I'm not mistaken. He took this short. I ended up taking this short. It just shows that you don't have to worry about missing a trade. Who gives a shit? Okay. You'll always be able to find something else later on. And if you don't, there's going to be those days too. You got to plan for them, you know? So over 200 points, that's pretty, pretty spectacular if you ask me. So yeah, hopefully you guys got value from today. I'm not going to keep you guys too long. I know I've had you guys here for almost 3 hours now. So thank you guys so much. Yeah, Tony. Yeah, Tony, you know the vibes. Tony, you definitely know the vibes. You definitely know the vibes, Tony. Come on, Tony, this ain't new. Hopefully it made sense though, you guys. Don't want to toot my own horn, but um I second that. Bro, Tony, you've already made some massive accomplishments just from this YouTube channel. And I'm grateful for students like you that have lend me their ear and have seen the value without me having to be a, you know, a crazy, like, you know, well, here's my Lambo and here's my bank account and here's, you know, the things I'm spending money on type of lifestyle content. Even without that, you guys are still here watching because you're looking for the actual information. You're not impressed. You shouldn't be impressed with whatever the hell Joe Schmo has in his garage. You know, we can't drive those cars. We can be inspired by it. There's enough of that inspiration on the internet. We don't have to add to it. You know, if we're like me personally, that's how I see things. That's why I'm a very basic person. I'm very simplistic. I don't, you know, lead with that. Although that's probably the reason why the channel's not going to grow that fast. But hey, I'm cool with it being exclusive. But I would love to have a bigger channel eventually, and I think we'll get there. You know, the more success stories that happen, the more undeniable it is. The more you know, people hang out with us and see what we're about as a group, as a community. I think people will continue to resonate and be part of the family. You know, just may take a little bit of time, and I'm okay with that. You know. Okay, Zulu. I'll talk to you soon, brother. Don't forget you could join the free Discord, or you could just follow me on Instagram, and we could DM and whatnot. I'm always open to going back and forth with everybody. So so yeah, I'm always gonna be here. Okay, so you could reach out to me that way. It's insane. Yeah, it's insane, Tony. We called the whole move. It's amazing. Let me see. For the first time, I was able to have those thoughts you're describing and make the trade I posted in the private community. That's progress right there. That's progress, Carlos. I know you voiced a lot of things, and I'm grateful that what we've been able to share, both me and the group, people like Byron and you know everybody that's in there helping me make the community what it is. I'm grateful that it's been able to have that impact on you, and you've been able to make that that type of improvement. The SMT really gave you, yeah. Yeah, what Zulu said earlier, if you guys see his comment, he said the SMT really gave me that idea that it was weak. Yep. Yeah, 100%. It's a confirmation tool a lot of times. in terms of validating if a level is going to hold, in this case bearish, or if it's not, right? Or if it's going to be ready to turn or not, or if you could trust the Kraken correlation, like the Dow rallying aggressively higher, but we got the S&P and the Nasdaq failing, or just simply the S&P or simply the Nasdaq failing to hit the fair value gap. That's enough to tell us that it's going to potentially turn overall. And you could see that, that's basically what happened here. In the face of the Dow being so aggressive, we were able to then continue to, hold on to the fact that price is going to decline, right? So yeah. Mike said, I got it. Rewatch. I got to rewatch it again because I missed the move. Okay. Yeah. No worries. I think people think NQ will reverse a run. Yeah. I'm sure that a lot of live streamers with a lot of big followings in the ICT community were probably thinking that, but generally we're on the opposite side of even them. So, and we're generally the one that's correct. And I've proven it live. So I will watch Nico's review. Yeah, definitely. You guys, like I said, go watch, go follow Nico's YouTube channel. Nico's got a YouTube channel. He's pumping out reviews and his opinion and stuff like that. So definitely go support him if you support me. I encourage everyone that's confident, that's been with me for a while, that's really smashing it as a result of being part of this community and, really, really finding themselves. I definitely encourage you guys to help me make this industry a better place by giving people the information that you guys have learned. Give your perspective, your honest perspective, and let's make the industry a better place. You know what I mean? But yeah, that was a spectacular call. So again, thank you guys so much for spending time with me this morning. Hopefully you guys got a lot out of this video today. Hopefully you guys saw the patience on display. Hopefully you guys can take away some of the different components that led us to declining, what made it so we didn't trust the buys even as price started giving us these fake outs, and why this fair value gap was so important, and why we targeted this low here. It did blow past a little bit further. It got to my even deeper target. I didn't think it was going to be able to get there, but it did. Previous day's low. So that's pretty nice. Beautiful. So yeah. So with that being said, God bless you guys. Thank you again for hopping on and always supporting the channel. It means a lot. I could just be doing this on my own, but why not share the blessing with the world and hang out with some cool people, and help each other, right? I think that's a funner way to do this rather than just being by yourself, So yeah, with that being said, again, God bless you guys. Thank you so much. And I will see you guys in my private group tomorrow morning. Same as always. And those of you here on YouTube, in the YouTube family, I will see you guys on Sunday, bright and early, 7 a.m. Pacific Standard Time. And then again on next Tuesday, we'll be back live, I believe at like 5 or 6, right? Just double check what the news shows. And depending on when the news is, that's when we'll go live, okay? So yeah, like I said, God bless you guys. And I'll see you guys on the next one. Hope you guys have a good rest of your day.